We just had a beautiful trade on Bitcoin. And what I'm going to share with you here, and by the way, I have offered this to all y'all for free. It's called the rubber band trade, and it just set up on the Bitcoins. And people often ask me if my trading system works on cryptocurrencies, and oh yeah, it absolutely 100% does. In fact, I trade crypto a lot. I love it because when we get good setups on it, I can make usually more money than I can on stocks and futures and Forex, etc. But we have to choose our opportunities. So here it is. Let me just show it to you. And by the way, if you don't have the rubber band trade, I'll offer it to you again. And I give it away for free. So, and this setup will occur on other markets. So if you don't trade crypto, that's cool. This works on Forex, futures, stocks. You can do it with options. You can do it intraday charts, daily charts, whatever you want to do. Okay. So what we got here is we've got Bitcoin daily chart. And here is the concept. I'll start with just sharing with you the concept initially of what the rubber band trade is. So first of all, it's a statistical model. It's a reversion of the mean mathematical model. It's the opposite, kind of think of it as the opposite of trend trading. So trend trading can be good, and I'm going to show you a statistical model here in just a moment because everything I do is based on statistical models, probabilities. And I'm going to show you why trend trading can be very challenging for most people. But reversion to the mean trade can have a much higher win-loss ratio for most people. All right, but before we get to that statistical model, let me just show you the basic structure here. So this line in the middle, this one that turns green and red, that's the 50-period simple moving average. And what we want to do is we want to see this puppy going down. So it's angling down, sloping down, and then we've got to have price bars above it. So it's price above a downward sloping 50 SMA. As you can see, I've got mine color-coded here. So if the 50 MA was angling up, it's not a rubber band trade. And the rubber band trade simply means, do I have a rubber band around here somewhere? Yeah, I do. We're snapping back to the reversion of the mean. So it's being pulled away, okay, pulled away. But here's your mean, so to say. Can you see this? Okay, pull farther, 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 farther. Farther you go, it gets further away, and then it snaps back to the mean. That's the kind of dynamic we're looking for. That's why I call it the rubber band trade. So the easy way to do this is just with the 50-period simple moving average. Now, muy importante that you use a 50 simple moving average, not exponential. This is one of those situations where we actually want a lagging indicator. And I know that sounds crazy, but yes, we can use a lagging indicator to make money. We do not want the leading indicator in this case. We want a lagging one. But it's the price structure and it's the mathematics of the thing. So as long as that 50 MA is SMA, simple moving average, angling down, get above it, we're going to go and trade it short. Now, there's a few other things too. Right now I'm simplifying it because I've only got 10 minutes in this YouTube video. So get all the details at rubberbandtrade.com. Go check that out. And I've got a little 5-video mini-series there. Absolutely free. And I give you all the details. All right. But if you took, by the way, for those of you who did take my little mini course on the rubber band trade, did you catch this? I hope you did. Right there for you. This is one of the things I promise is I want to help you make money before you spend money. Before you buy any course from me or anybody else. Get this trade it, and make some money. Right there, bam, you could have been making money on Bitcoin. Okay, so now I want to show you that statistical model that I was talking about in trend trading. Trend trading is great with regard to risk reward. So here we get a beautiful trend, typical trend, and we've got a wave 1, wave 2, wave 3, wave 4, wave 5. So what I like to do is I like to get in down here. I enter on a wave 2. That's where I enter on a trend trade. And then we can hold it for 5 waves. That's your average trend. And as you can see, great risk reward. Actually, I'm risking the range of that little bar right there. That's all I'm risking. So tiny, minuscule risk at huge reward. So trend trades are great risk reward ratio trades. By the way, I'm able to nail the timing on these to the penny, to the bip, to the tick. So that's another indicator that I've got that I'll be happy to share with you. And but for right now, let's just look at the beauty of a trend trade is the risk reward ratio, as I said. But here's the downside of trend trading. Markets don't always trend. In fact, most of the time, they do not trend. So when you catch one, yeah, big money. But let's go forward. So after our trend, what happened? So after the trend, what we ran into was, there was our wave 5, then the market came down, went back up, came down, went back up. It's not creating any trend right now. It's just kind of going up and down, up and down. It's kind of range bound, barely breaking some lows, barely breaking some highs, comes back down again, starts to try a trend, but then comes all the way back up here again, takes out that high. So this is what we call a mess. Okay, that's the technical term for it, of professional trading. Actually, what it is the market, as I said before, does not trend most of the time. Some people say the markets trend about 20% of the time. I think it's actually less than that, maybe 10 or 15% of the time. So we need other trading styles. Trend trading is great, but if you're only trend trading, you're not going to have very many trades. So this is where the rubber band trade comes in and other types of trade setups that I have. So what's happening here is the market is just fluctuating around the mean. Now remember, the mean, we're using the 50 SMA as the mean. So we're above it, we're below it, we're above it, we're below it, we're above it. Okay, now let me bring up that statistical model for you that I promised. So here's the model that I was referring to, and you've probably seen this before, the good old-fashioned bell curve of probability. And this is exactly the model that we're using. So this is the equivalent of that 50-period simple moving average. Okay, that's the 50 simple moving average on our charts. So what it was happening there, that last example that I showed you, was price, the vast majority of price action will occur around the mean, just like this bell curve, right? Very little happens down here, 2% at 2 standard deviations to the left, 2 standard deviations to the right. There's very little activity that's going to happen there statistically, and the vast majority of it is just going to follow, the bell curve here. It's going to happen here. So it's going to go up and down, above and below, and above and below, and above and below. This is very hard to trade. You do not want to trade this. What you want to trade, all your trades should be based on extremes in the market, where once it gets to these extremes, it is very unlikely that the market is going to stay there. And again, reversion to the mean. Once it gets way out here to the edge, high probability it's going to go out there. Only a 2% chance it's going to go this way. Super high probability it's going to return to the mean. So this is why these are fantastic win-loss ratio trades. Now, of course, that's the big picture, that's the structure, that's the model, that's the meta pattern. So in addition to that, what we need is a Scalpel tool. That Scalpel tool in our trading toolbox is going to be our market timing indicator, our market entry indicator. That's going to be our accuracy tool that shows us where to get into the penny, to the pip, to the tick. So just as I was mentioning before, I've got my cycle indicator that will enter me right in onto that bar to go short on the rubber band trade. So on this trend trade where we went up 1, 2, 3, 4, 5, where this timing indicator would get us in would be on the wave 2, as I mentioned, but that's really just that bar. It's literally to the penny, to the pip, to the tick, right at that bar. So this is our risk. It's actually even a little smaller than that. My risk is the high of that bar to the low of that bar. That's how precise this indicator is. So you can get it at indicatorwebinar.com, and it's called indicatorwebinar.com because there's a pre-recorded webinar there. I used to do it live, but now I recorded it, so you can go check it out anytime that you want. Absolutely free. Learn, and I give it to you in a tutorial because I don't want to just hand you an indicator and you're not sure how to trade it. I want to empower you so you're self-empowered on how to trade it. So now you can put together the rubber band trade, reversion of the mean, structure the big meta pattern, and then have the cycle indicator to pinpoint exactly when to enter on them and other trades as well. I use this timing indicator in every trade setup that I take.